What's going on, Exotic fam, and welcome back to another video. Now, today we are going to be talking about something I never seen other people talk about. And honestly, I think it's kind of bullshit how they want to keep the good information for themselves and just sell the same repeated like let me tell you what they do. They'll say, "Okay, you need to check this, you need to check that." The next video, or maybe a couple videos later, they'll say the same damn thing but just change it up a bit. Like, come on, they reused information. I'm here to give you that real shit. So before we get into the video, just make sure you like, subscribe, turn on post notifications for any more, and let's become a fucking good trader. Now in today's video, we are going to be talking about natural versus unnatural causes in the market. And we will be focusing mainly on PPI, BOJ, unemployment rates, FOMC, and GDP. Let's get into it. So what's PPI? It's the Producer Price Index, and what this basically is it's the change of cost of a good in a country or a service in a country. So like an easier way to understand this is I'm a farmer, and you guys are the people who sell me my seeds that I need to plant to make money off of this farming business. And you guys bump it up, let's say 50%, 20%, something around that zone. I don't know what I'm talking about. I'm just giving an example, throwing it out there. So 20%, now I have to pay extra, meaning that the crop that comes from my yield, the product that I produce, I'm going to have to sell it for more than what I bought it for because I have to make money in this. I can't just be a farmer who's losing money. That's just not how it works. That's not how business works. Business is about profit. Now, this can tell us a couple things about a country. This can tell us how like a country's doing economically, and whether or not its currency is inflated or not. PPI is a good way to look at inflation if you want to. It's a really good way to get a better outlook on it. But right here on the chart that we have in front of us that has just been sitting here while I have been talking, right here we have it starting at 730. This is where we had a PPI drop for USD, and with this PPI we can see that it was a huge downside of a sell. Now this can mean one or two things. This can mean either USD was weak and it sold out and that's why it dropped. Oh shit, hold on, can I keep this one? So y'all are definitely gonna see a couple clips like that because I forget what I'm talking about a lot. That's gonna be a reoccurring thing with us. Yeah. So basically, what I was saying was at 7:30, February 13th, PPI dropped for USD. Now the forecast was 0.10% lower. Or no, it was 10% higher than the forecast and 10% lower than the previous. So this shows us that there's less in the demand, so that can weaken a country's currency. And for USD in this case, it looks like it was weakened where it fell side of EUR, and that's why we got that sell coming down here. Now you can make these inferences. You can decide to look at the country, say, okay, PPI is dropping, let's look at some news. This knowing the basics of this can really help you look deeper when you're trying to find what's gonna happen when this drops, what's gonna happen when news comes out, or PPI or BOJ or GDP when this comes out. That's what I'm trying to help you do. We are trying to help you find when to take these trades, how to decide or make an inference on what direction it'll go to and to what extent. Now, PPI in general, it is okay. So what I meant to say was this is an unnatural effect on the market, and it does not keep a restabilized zone. And what we're gonna talk about these zones a lot because I'm gonna catch these trades whether I'm doing a challenge or a live stream. I'm gonna be catching these trades. So restabilization to me, and this is to me and my definition of it, the market is hit with an unnatural force, yes. But because of the unnatural force, it's not going to change the directory of the market. Now, a couple of these news pieces we're going to be talking about do restabilize, and some don't. And the ones that don't, well, let's just say you get fucked. Yeah. But it's good to know which do and which don't, so you know when you can hold and when to expect a minimal drop or a change in the market. Okay, so BOJ. Now, I'm gonna be honest with you guys. It's not worth it to trade it, to get involved with it. Honestly, that's my opinion. I think it's just kind of ass, to be honest. And everyone can else, you can have your own opinion. I don't give a fuck. But it's ass. Okay. But basically, I'm still gonna give you the rundown of it because that's what I'm here for. I'm here to help you guys learn while I'm learning at the same time. And I learned that BOJ was ass. So it's basically like the USA's FOMC, only a lot weaker. And it's basically about expectations on interest rates, general money supply, or just even, what we can expect on the markets. And, I was looking at some folders that dropped, some red folders, and I saw this kind of ass, and I looked at some other ones, some previous, some policy rates, like just all these BOJ affiliates, and they were just all ass. So, I definitely don't recommend trading it, but that's BOJ for you. Unemployment rates. So what is it? Okay, it's literally in the name. We can see that. So countries would drop this every now and then, and it'll show us basically what's going on. Is their economy doing good? Do they got that working industry, in process? Like, is it growing or is it slowing down? And that can really determine a country's growth or path that it's going on. And with this, we can see that here. Let me go ahead and show you that Forex folder. Okay, it should be on the screen. So yeah, that folder right there, that basically showed us that we did have a good unemployment rate drop from CAD, but we also had some subsidies. We had USD drop at the same time, and we are on a USD CAD chart, which is why we can see a buy instead of a sell if the CAD folder was good for unemployment rates. And we also had a CAD folder that showed us something big, and I'm gonna zoom in on that right now with that previous photo. So yeah, like that's just showing me like something's going on and it's not good, because the forecast was expected to be 19,000 and it's at 1. The previous was 95, whatever that was. It's dropped for sure. So and that just shows us why this had a huge buy instead of a huge sell. And this can also show you ways to differentiate between the two and decide, okay, so let's take a look. CAD was about to sell, but since USD came out and USD was pretty good, it overruled CAD and we got into a buy. And from here, we continued to go on an uptrend where we have a new higher low and now another higher low. We have our higher high. It's just starting to look like an uptrend. So this was a huge boost in the market thanks to USD coming out with those folders. But I think that's really all you guys should really know for unemployment rates. It's nothing too crazy, but you can have crazy movements at some times. So for sure, look at that. But moving on to, what was it? CPI. Alright, so check it out, guys. FOMC, what is it? It's basically the same thing as BOJ. It talks about interest rates, the general economy of the USA, and inflation in the USA. So now that we're looking at this, this chart I have back here, we have USD CAD up, and we're looking at this huge spurt of a buy, right? With a little retest here, a little pullback. But you gotta have a little pullback to keep going up. Just remember that too. And what we're seeing here is that when this red folder dropped, Powell started speaking and FOMC folders were dropping, we have a huge buy for USD, showing that whatever was being spoken about or whatever documents were dropped, it was good. It was great for the US economy, and that's why we had such a huge buy for USD CAD. Now, that's really it for FOMC. A good way to try to differentiate which way it'll go and how far for a trade is to really pay attention to different details with different folders that drop over time. Now, FOMC, USD inflation folders, look at USD GDP, any folder that drops that has relation for or with USD, you can use it to really just try to make an inference, a really educated inference on what way the trade is going to go and how long. And you should also do this for all the other ones as well, because they all kind of play hand in hand, and that's just really what it is. GDP. Look, you might have heard this in school. If you weren't paying attention, that's on you. But I'm here to really enlighten you and give that back to you. So GDP is the gross domestic product, and GDP is basically the average product in a country. So how much product is being made and how much is being sold. Now, this can show us how an economy is doing, whether its companies are keeping up with the country's demand or whether they're not. And when we look over here at this market, USD CAD, right here we had the GDP folder that dropped for CAD was bad. So now that was bad, we expected a buy since CAD had weakened in the market. So this can show you that even though it was a CAD folder and you were maining for a CAD trade, you weren't able to get that sell from CAD, but hence you were able to get a buy from USD. So you shouldn't only look at one opportunity when it comes to a position, but the multitude of them. Alright, y'all, I appreciate y'all for tuning in. Just remember to stay exotic and to be exotic. Let's go.